reports. Don't have to do any of that with an LLC until it gets to be a certain size, right? And these are problems that you want eventually, right? But you don't need them right now. You just need to incorporate. You need the most robust protection you can get, and you need to have something that you can run the way you like to run it, which is without a lot of hassle. The LLC is that vehicle. It also, under many state laws, certainly Texas, the most robust protections for the owners, for the members, the shareholders, what have you. The most robust protections are LLCs. So personal assets, the least at risk, LLCs. That all being said, there are other corporate entities, and they are all good, right? But the LLC gives you, under our current Texas law, the most robust protection. LPs, limited partnerships, can give similar. They are more expensive to form. They are a little trickier to keep in good standing. They require little bit different level of reporting. Annual reporting is required with every Texas corporation to keep it in good standing. Even foreign entities registered within the state of Texas require those things. So the other thing that is critical to know about corporate is that at some point, generally when the revenue gets to a certain level, it might be beneficial to make an election as to whether or not you want to continue to be taxed as an S Corp, right? An S Corp election, which changes the nature of the LLC and makes it more like a corporate entity, where it may pass income not directly to shareholders, because that's how an S Corp is taxed, as if it were a sole proprietorship. Basically becomes a disregarded entity. Everything, all net revenue to the company is net revenue to the owners, which means a really good year could really spike your income tax bracket. That may not be in your best financial interest as your company continues to grow, thrive, and survive. And at some point you may want to change that election so that the company can hold on to more of the revenue for things like capital improvements, for things like hiring, for things like scaling manufacturing, etc. Those members or managers or shareholders may want to keep more of the money in the company and then take some sort of management fee or some sort of salary, and thereby, yes, there's dual taxation, right? Because the money is taxed once at the net revenue, right, for the corporation, and then taxed again for the salary, management fee, whatever it is, to the shareholders, members, owners. However, not all of the net profits of the company are going to be considered the net revenue of the individual shareholders. They may not want to take all that income, right? Because so much of it might be in your financial interest at a certain level to make sure that that money stays in the LLC, in the corporate form, right? So that way you can continue to use it and you're not just taxed on it every year. So these are things that you need to be cognizant of, especially as your corporation continues to grow, thrive, and prosper. At what point are you at a financial level that you need to start talking to your CPA, to your financial advisor, about making this election? So things to think about as your company continues to grow, survive, thrive, and prosper. Any questions, hit me up, chat@ashmorelawfirm.com, chat@ashmorelawfirm.com.